My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be my friends. Just trying to save you a little money over here. My job is not just to entertain, but to do some teaching, try to explain all this stuff. So call me 1-800-743-CNBC. Tweet me at Jim Cramer. If you follow stocks with any regularity, you'll notice this profound pattern where the same stocks just go up and up and up, while others, the vast majority, merely languish. The leadership stocks that seem to have no ceiling are in tech, but not the techs we're used to, not the household names. They're most certainly not the hyperscalers, those giants that made up FANG and then the Magnificent Seven. Those stocks barely move at all, and often when they do, guess what? It's down. Lately, the tech leaders, they're far more obscure, and many of them aren't in the averages. So when I tell you the Dow dropped 507 points, the S&P lost 1.2%, NASDAQ declined 1.35%.
The House of Pain.
Mostly because of hawkish statements from the new Fed chief at today's press conference, understand that we're missing something important. Oh, by the way, I could talk all day about whether we get Fed, hikes or we stay the same. But you know what I'd rather do? I'd like to try to help you make some money. I think it's more significant. Anyway, I'm going to talk to you about the stocks that worked, even today, that are in tech, that are not the hyperscalers, certainly not Microsoft. The semiconductors and their friends that are benefiting from a spectacular shortage. Stocks like Micron, which reports on the 24th, Seagate, Western Digital, SanDisk. These companies make semiconductors for memory and data storage that are less complex than anything that would come out of NVIDIA. But these companies can't make them fast enough. They keep putting through price increase after price increase after price increase, and they are making many devices we use more expensive. Just this evening, Apple CEO Tim Cook said that Apple's going to have to raise prices because of these memory chips. So their stock prices, they just keep rallying. And the rest of us?
The House of Pain.
Almost every day, an analyst who hasn't kept pace with these stocks runs raises their price targets for each of these. Then the next analyst has to raise the price targets. Then the stock has overshot the earlier ones. Then another one comes in and raises and raises and raises and raises. And that's how these stocks have gone up so much. It's a giant game of leapfrog. The price target boosts are gigantic, even if pricing for the products is just creeping up gradually. Look, I get it. This is how Micron got up 266% this year. Seagate jumped 287%. Western Digital rallied 313%. SanDisk has galloped 725%. These are phenomenal gains based on shortages for DRAMs, just the kind of stuff that Apple's talking about, kind of memory chips that our data centers desperately need, too. Then there's another tier. We got shortages in commodity semis because we also got shortages in semiconductor capital equipment that you need to make the commodity semis. So KLA up 96%, Lam Research up 119%, Applied Materials rallied 131%. We know from the fabulous Gary Dickerson, the CEO of Applied Materials, that his company's been able to get long-term contracts for the first time ever, assuring multiple earnings bumps down the road. Finally, there's the supplier of computers and components for the data center, Dell up 233%, Marvell Tech up 241%, ARM Holdings up 283%. Oh, boy, the analysts play leapfrog in these daily. Oh, I'm raising price, raising price, raising price. Yep, all of these stocks have this endless parade of raising price targets, and nearly every time it pushes them higher. I mention all these shortage plays because they have passionate fan bases. They're like winning teams, and the stocks rarely go down on the days when the price targets are raised, including today. It doesn't matter if the stocks are up very big. Look, maybe tomorrow it will because of the Apple statement. I don't know. See, at one time in my career, I would have said that it was insane to buy these shortage stocks after they've already rallied so hard. You just have to say you missed them and you move on. End of story. Unless you feel like kicking yourself or missing out, something I used to do quite often. But I'm now convinced that that's the wrong way to approach some of these stocks. As I told CNBC Investing Club members at my noon meeting today, there's an endless debate going on in this market that revolves around passion versus rigor. You see, rigor would imply that you missed it, move on. Passion says it could go up more and you didn't miss it. There's plenty of upside left because things are just that good. That's passion. So the goal should be to find the next big one that may have gone up and try to catch it when it's down and getting ready for its next leg higher. Today gave you some opportunities. See, Fed Chief Warren, she came out swinging, making it clear that the Fed no longer has a bias for cutting rates. Many of the Fed officials want to raise rates because, from their perspective, the economy is running too hot. Tightness could be coming soon. And that news, which came out at 2 p.m., immediately caused the market to roll over. Which is when you want to pounce. And which stocks do you want to buy? Okay, I told club members that the answer is my new favorite stock in this market, Intel. We know the story. We had the CEO, Lip Bhutan, on our show, and he was talking about how we're going to need a ton of CPUs. Those others were DRAMs I'm talking about. CPUs are Intel's bread and butter. As the demand for agentic AI explodes, it's all about the ratio. Initially, we needed one CPU for every 8 GPUs. GPUs are what NVIDIA makes. Then it moves to one CPU for every 4 GPUs. And thanks to the rise of inference and agentic AI, it will soon be 1 for 1. In fact, Lip Bhutan told us it could go to as many as 4 CPUs for 1 GPU. 4 CPUs. That's incredible. CPUs are Intel's wheelhouse. It's going to produce an explosion of business for Intel. The stock still finished up 3.5% today on a really horrible day, but it did pull back a couple bucks from where it was trading before the Fed statement. Another key part of the Intel story is the chip manufacturing business, which is similar to what Taiwan Semi does. It's foundries. With Taiwan Semi operating near full capacity, as hundreds of billions, but potentially trillions of dollars flow into AI infrastructure, customers increasingly need alternative sources of advanced chip making from Taiwan Semi. That's great for Intel's foundry business. Companies are increasingly looking for U.S.-based supply to protect against geopolitical risk. Another reason to like Intel. Now, under the previous CEO, Intel spent billions of dollars on foundries, and they were a mess. Under Lip Bhutan, who's a real engineer, the problems have been solved. There are going to be foundries coming online for several years now, and I'm confident that they'll all end up being solidly profitable. Today, we learned that Intel has started production of an 18AP chip node foundry, which, if successful, could get some orders from Apple. Elon Musk's giant Terafab project is another Intel partner. There could be many things occurring. These are all because of Lip Bhutan. I know it wasn't that long ago that this crown jewel, this national treasure, was on the ropes. Stock fell around $18 at its lows last year. First the government and then NVIDIA had to come in and buy stock literally to save them. Since then, Lip Bhutan has been able to fix one area after another, and the results have been extraordinary. Stock's going up more than 100 points. Now, I could stand here and tell you, hey, up 100 points, but you sure didn't miss it, sucker. But as I've said over and over, that kind of thinking doesn't work with this group right now. Hasn't really for more than a year. There's a revolution going on, and this revolution requires as many CPUs as possible. CPUs are Intel's wheelhouse. It's the king of volume. We're going to need it because I think CPUs may end up being like the DRAMs are now, the ones that just caused Apple to raise prices, which means you're going to get to a shortage level, and you're going to get number bumps and price target boosts galore. Here's the bottom line. I don't want to throw away the discipline of not touching a stock that's rallied like crazy, but when it comes to tech hardware that's connected to the data center, I think sometimes you may not even have a choice. You can't afford to care about where these stocks have been. You should only care about where they're going. And when it comes to Intel, I think the answer is up. All right. Now we're going to Hope in Ohio. Hope.
Hi.
Hope, hi.
Hi. How are you?
Hi. I'm doing good. How about you, Hope?
I'm great. Thanks.
All right. What's going on?
Wanted to get your opinion on Marriott. Kind of chat a little bit about Marriott.
All right, here's the deal with Marriott, okay? I have told, and I've said this to the CEO, this is what I call an up stock. Every time Marriott goes down, you have literally, if you take a look at the chart, you have to pull the trigger, and I'm sticking by that. And you know, it's really incredible. I don't feel that way about any other hotel company. Marriott is the best. Now I'm going to go to Sonny in Illinois. Sonny.
Hey, Jim, a big booyah to you from Eggenberry in Orland Park, Illinois. How are you, my friend?
Whoa, man, that's a powerful geographical booyah you threw at me, and I thank you for it. What's happening?
Hey, club member, longtime fan. I love your new book, How to Make Money in Any Market. But I got to be honest with you, Get Rich Carefully was my favorite, Jim. Get Rich Carefully was my favorite.
Get Rich Carefully was your favorite? You know, it was an okay seller. I thought it would have been a better sell. I mean, I'm never supposed to talk about book sales. That's like striking the bone. Let's move on.
I thought it was better than okay.
I loved it. I thought it was a good read. I read it to myself periodically. You know, just
at 3 o'clock in the morning, right?
No, 2:47. That was the problem. I got up at 2:47. No, I'm not kidding. Until I discovered the wonders of chemistry, I got up at 2:47 every single night for over 30 years. Never 2:48, never 2:46. It broke up a whole marriage. It was so sad. It was terrible.
Just like clockwork.
It was clockwork. 247.
Yeah.
247. Unbelievable.
247. I'm going to remember that.
247. It was like, I thought it was like some sort of Twilight Zone.
Call your next
And I always woke up.
247.
I always woke up like, you know, like without the coffee. You know, like I've been to Dunkin' Donuts 17 times. I don't know how it happened. Oh yeah, what stock? I'm sorry, I got a little carried away there. Just having a little fun.
No
I'm
worries,
sorry.
my
They don't pay
friend.
me to do that, partner. What do we got?
I love you entertaining us, Jim. It's all good. You can
Thank
ramble
you.
on all in all, my friend.
I do all the things you're not supposed to do on TV. Every single one of them.
You're not just here to educate, but to entertain and make us money.
Thank you. Thank you. What are we doing?
So, Jim, I'm looking at a company. They posted some super stellar strong earnings, I think, about a month ago. I'm going to ask you a two-part question. If I should buy, sell, or hold, and if you tell me to buy with the Bulldog, just tell me if I should wait for a further dip because the market's a little uncertain right now. The company is Archer Daniels. Archer Daniels.
Right, I'm going to tell you something. For the first time, I'm going to give you a twofer. You gave me a twofer, I'll give you a twofer. For the first time in like 17,000 years, when I used to get up at 247, I like Archer Daniels Midland and I like Tyson Food. I'm not kidding. I like ADM and I like Tyson. You know what? And it's remarkable. These are two stocks that I hated since 1847. All right, anyway, look, sometimes you have to stop thinking about where a stock has been. You got to start thinking about where it's going to go. Otherwise, you could be missing out on some big gains. I'm not kidding, but Archer Daniels is really right here. On Mad Money tonight, SOB held its Digital Investor Day earlier today, and I got the company's top brass to run through the highlights. Man, are they smart. Then Ford, they rejected me in 1983 from a job. Just wanted to point that out. Then Ford's got this new energy division. I'm going to find out what's going on with that. And later on, I'm going to spice things up with the CEO of Ingredion to learn more about its deal to acquire this storied Tate & Lyle. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.